Let me introduce Ulrich Volz, and apologies, I'm running slightly late. So Ulrich is a professor at SOAS. He really is one of the leading lights in sustainable finance around the world, and has a particular expertise on central banking and climate change and monetary policy. And also being at SOAS, he's very focused on developing economies and in particular Asia. So Ulrich, it's a real pleasure to welcome you, and we look forward to your speech. Don't worry, you can run over and you can go into our morning tea. So over to you, and thank you very much for doing this, Ulrich.
Well, thanks a lot, Ivan, for the kind introduction and for the invitation to deliver this keynote. And also major congratulations on your amazing accomplishments at Otago. You know, kind of I could also listen into your little review, and it's really impressive what you have achieved. And it's been also a great pleasure to work with you over the last couple of years as part of GRUSFI, but also the special issue we edited together. And Griffith is very lucky to get you. And I apologize in advance if you should see me yawning in the next half hour. And it's not that I'm bored about the topic that I'm going to speak of, but it's quite the opposite. But I returned from Japan early this morning, and I'm still not fully adjusted to British time. So I'll put up my slides later, but I'll do a bit of framing before I do that. So my talk is on central banking in the Anthropocene, and that's based on joint work that I'm currently doing with Simon Dickau, who's actually also a former PhD student of mine and has become a very great colleague and co-author. And this is building on research and policy work I've been doing over the last decade or so on the role of central banks in addressing climate-related risks and impacts. And so much has changed over the last decade. 10 years ago, there were hardly any central bankers who were willing to consider, let alone accept, that climate change or global environmental change more broadly had profound implications for their work. And also in academia, very few economists could imagine a role for central banks in greening the financial system. Actually, in spring 2015, I gave a talk with this title on the role of central banks in greening the financial system at a conference of the Institute for New Economic Thinking. And I thought, oh, you know, new economic thinking, they should like it. But it turned out that only very few people actually appreciated this new thinking. And really, so much has changed. 5 years ago, in December 2017, the network of central banks and financial supervisors for greening the financial system, the NGFS, was launched at the Paris One Planet Summit by just 8 central banks and supervisors. And today, this NGFS network consists of 121 members, including all the major central banks in the world. And all of them do accept that the physical impacts of climate change and also the transition risks associated with the responses to climate change constitute a major threat to macro-financial stability, and also that central banks and supervisors need to do something about it. And there's been huge progress in developing a better understanding of macro-financial risks and also impacts. And central banks around the world have started to conduct climate stress tests to identify vulnerabilities in the financial system. We've seen key international bodies like the Financial Stability Board develop a roadmap for addressing climate-related financial risks. And a few weeks ago, the FSB actually issued recommendations for supervisory and regulatory approaches to climate-related risks. And none of us would have thought a few years ago that this would happen. We've just had the Basel Committee on Banking Supervision publish some principles for the effective management and supervision of climate-related risks this summer. So there has been really a lot of change, and there has also been a recognition that climate change is going to have impacts on price stability, which is, of course, at the very core of central bank mandates. So recently, we've heard lots of central bankers talking about climateflation, greenflation, and things like that. So in many ways, we've already seen very profound changes in how central bankers think about climate change and their role in it. But I would argue that many central bankers and also academic economists still fail to properly grasp how profound the changes will be for our economies and for the work of central banks in the decades to come. And this is what I'm seeking to discuss in this talk on central banking in the Anthropocene. And now let me try to get my slides up. That's always the tricky part. One moment. Where is it? Too many windows open. Here we go. 1 second. So, why is it not turning full screen? Now it is. Okay. So what is the Anthropocene? The Anthropocene follows the Holocene, which is the current geological epoch, which began around 11,650 years ago. And the Anthropocene has been described as a narrative of human domination of planetary systems on the goals, function, and transition of the economic subsystem. The IPCC has defined the Anthropocene as a proposed new geological epoch resulting from significant human-driven changes to the structure and functioning of the Earth system, including the climate system. And these human-driven changes to the structure and the functioning of the Earth system that characterize the Anthropocene will have very, very profound implications and impacts on our societies and on our economies, and are likely to radically change the environment in which central banks operate. So, how does central banking look like in the outgoing Holocene? First, it's characterized by single materiality. So we have basically external shocks affecting the financial system, affecting the economy, but they don't fundamentally threaten it. Shocks tend to be relatively small and also caused by external factors. We have supply shocks, demand shocks, but as economists, we have a relatively good understanding of how these things work. And of course, central banks do react to different types of shocks, perhaps an inflationary shock, financial bubble, a financial crisis. There's always something new, but fundamentally, there is a relatively good understanding of how the economy works, what the mechanisms are, and so on. And it's the world where central bankers, use DSGE models and kind of feel comfortable with it. I'm not a big fan of those, but it's the world where central bankers have a feeling they know what they're doing. So why do we need some new kind of approaches for central banking in the Anthropocene, this new era where climate environmental changes, which are man-made, have much, much larger impacts on our economies and societies? And the answer is that because the challenges posed by anthropogenic climate change and the crossing of all kinds of planetary boundaries threaten the very existence of our economies and societies. So we're moving into a completely new territory. And in this new world, the narrow central banking approach centered around inflation targeting, where we have one target, which is inflation, and one instrument, that's the policy rate, is unfit. And I mean, I would argue, and I have argued indeed, that this kind of inflation targeting approach has never been fit for the job, but it's even more unfit in these new realities, which will be characterized by more climatic and ecological shocks, and will have much more and much larger social disruptions. And central banks, along with, of course, other policy institutions, need to mitigate and manage these shocks. Also, we are in a situation now where the smooth transition to net zero that we have been hoping for is getting ever more unlikely. So this window is closing very rapidly. And we had over the last couple of weeks a lot of discussion around the 1.5 degree target, how realistic it is. The economists, and the economist always knows, has declared that the 1.5 degree target is no longer achievable. And a lot of climate scientists will actually agree. So we are in the beginning of a new era, and the prospect is that we are entering a permanent emergency economy. In a way, what we've been living through over the last year or so, which has been described as a polycrisis. So, kind of the pandemic, and then the Ukraine war, energy price shocks, and so on. This may be a taste of what we will see in the future, but on steroids. So in this new kind of environment, it's going to be very difficult to justify the view that central banks should be mere passive bystanders. So we are seeing very profound changes to our Earth systems, and these will have very, very profound impacts on the economic and financial systems that central banks oversee. And it's also important to note, of course, that the economic and financial systems that central banks oversee themselves have tremendous impact on the depletion of nature and the worsening of climate change. So this is the kind of double materiality that has been recognized now. And so, for example, the NGFS has also acknowledged double materiality. So, in other words, that central banks are part of the system that affects the environment, and that they are also, of course, then exposed themselves, and the economy and the financial system that they're overseeing are affected by the degradation of the environment. So this is the new reality, and shocks will be ever more complex. Climate change, as we know, is non-linear. We have radical uncertainty. We may see all kinds of green swan events. We will have tipping points, cascading effects, a lot of interrelated and compounding effects. And so this is a much, much more difficult world to understand. And the DSGE models, which haven't been particularly successful in modeling the current world, will be even less useful. And very importantly, we need central banks to act in this environment instead of just reacting. So, so far, central banks would mostly respond to shocks, but they need to proactively try to mitigate risk. That's the big difference. So what are some of the core elements of central banking in the Anthropocene? First of all, of course, it's very important, and this is what central bank supervisors have been trying to do over the last couple of years, and there has been important progress. First of all, central banks need to try to better understand the macroeconomic and financial risks stemming from climate change and also other environmental processes, and these risks and impacts need to be accounted for. Secondly, central banks also need to account for the impact of their own actions on the climate and the environment. So that's the important element of the double materiality. And while thus far the focus has been mainly on identifying and mitigating risk, we would argue that central banks really need to be much more proactive in trying to help align the financial system with climate, but also biodiversity goals, and really play a much more important role. Central banks need to really take a strategic position on net zero, but also on biodiversity, and consider how they can support adaptation and mitigation finance. They need to really help to bring down dirty financing. They need to be much proactive in mitigating the risks related from or the adverse impacts of finance on our societies, on our environment. And then, very importantly, given that we will see more and more shocks, central banks also need to be thinking more proactively about emergency measures they can take when disaster struck. So, as I said before, we're likely to move into more of a permanent crisis situation. And central banks need to think carefully how they can respond to different kinds of shocks. Oops. So one important element of central banking in the Anthropocene is that central banks can't go back to the notion of being neutral. One of the cherished paradigms of central banking is the market neutrality principle. And market neutrality has always been a fallacy. So whatever central banks do, they always will have, their decisions will always have allocative impacts. Whether they raise interest rate or lower interest rate, this will have big impacts on borrowers and lenders. I think of exchange rate policy, this always has impacts on different impacts on different parts of society. So central banking is never neutral, and the notion that it could be is a complete fallacy. And when we think about climate change, I always like to refer to Nick Stern, who famously called climate change the greatest market failure ever. And it really is, because markets continue emitting carbon at enormous rates, and they don't properly price negative externalities. So economies and financial systems are a big part of, financial systems are a big part of this market failure. And if central banks take a neutral stance in the face of this market failure, they're basically perpetuating this market failure. So taking a neutral stance in the face of climate change is absolutely wrong. Instead, I would argue that central banks really need to take a market shaping approach rather than a market neutral approach. So central banks need to think about what kind of financial system will best support our economies. What kind of financial system will best support price and financial stability and sustainable development in line with the various sustainability goals, so climate goals, biodiversity goals, but also equity goals that our societies have set. And historically, central banks have been incredibly impactful in shaping markets. And there are many different ways, whether consciously or unconsciously. Central banks are at the very heart of the financial system and of the economy. So their actions do matter. And they can have great impact on the shape and function of the financial system. And they can do that using different tools. Monetary policy is one of them, but also macroprudential regulation. These can have big impacts on how financial systems are structured, how they evolve. So just think about the financial regulations that were introduced in the 1930s. In the US, they completely changed the form and structure of the US financial system until they were dismantled in the 1990s and early 2000s. And then there was a completely new type of financial system emerging, which unfortunately didn't benefit the US economy very much. Central banks also manage often very large portfolios. How they do that, again, can have big impacts on the financial system and the economy. Central banks can play a critical role in market development. And that also includes, of course, the development of sustainable financial markets. Ivan mentioned fintech recently. This is a key area where central banks can be market shapers and not just market takers. And last but not least, central banks have a huge convening power, and they can really set out the direction, provide clarity on where the financial system should be heading, and also provide predictability and integrity of the system. So, for example, when it comes to aligning the economy with net zero, of course, we do need governments to set out clear climate policies, but also central banks, through their regulatory powers, through their market shaping powers, they can really help push the alignment. And we recently published a report on transition plans and how transition plans can be used as regulatory tools. There are actually a lot of ways how central banks supervisors can really push financial institutions to move into a direction. And they need to be much more proactive in doing so, because as mentioned, the window in which we can still achieve the climate goals is closing very rapidly. So we can't wait for markets just to align their activities in a couple of decades. This needs to happen now. So we need much more proactive regulatory approaches now. But of course, the question is, if I'm advocating for more proactive central banking policies, where's the limit? And that is a tricky question. And I would say there is no universal answer because different central banks operate in different circumstances. They are bound by different kinds of mandates. So, of course, there has to be legitimacy. So central bankers can't just, decide by themselves, oh, we want to rule the world, and that's what we do now. So it has to fit in the political context. It has to be backed by the mandate. But if you look at current mandates, of course, there's always a focus on price stability. But financial stability, macro financial stability, that clearly is a key role for the central bank. And quite a number of central banks actually do have some explicit or implicit mandate to support government economic policies and sustainability goals. So current mandates do provide quite a lot of leeway. But of course, the actions of central bankers need to be really backed by the system they operate in. Otherwise, there will be accusations of mission creep. And indeed, when Mark Carney in 2015 gave his first speech on climate change, the Financial Times had a story about mission creep, and different people were accusing Mark Carney of leaving the remit of his job. But that's also why it's so important that central banks explain what they're doing and why they're doing that. It has become now widely accepted that there is a role for central banks in addressing climate risk and impact. So whatever central banks do, they really need to justify that properly. They need to be accountable. And of course, they also need to face tough questions. And we need to be vigilant, to use central banking language, to make sure that central banks are actually doing the right stuff, and that they're not using some kind of wrong model of the economy. And of course, also, it's clear that central banks by themselves can't save the world. So it's not the single role of the central bank to mitigate climate change, to help better adaptation to climate change. This is a broader, this is a role for the government, but at the same time, we will not be successful in climate change mitigation, and also in making our economies more robust to the impacts of climate change, if the central bank, if the financial supervisors are not on board. So they play an important role. They are really key for making sure that the financial system becomes part of the solution and not part of the problem, as is often the case now. So to wrap up, I would very strongly argue that we will be moving into a world where central banks will have to step up their efforts in addressing the impacts of climate change. They won't be able to maintain kind of market neutrality or the illusion of it. They will have to become more active in aligning the financial system, in shaping the financial system so that it delivers better outcomes for society, that it helps to build resilience of our economies, because resilience is what we really need. And over the last couple of years, we've seen through a number of very painful shocks how fragile our economies are, and really how important it is that we build this resilience. And so I think in this new world of the Anthropocene, central banks will assume a critical role, and they should get prepared for that. And with this, let me hand back to Ivan.
Fantastic, Uli. So I hope you guys picked up on that. It's a really thought-provoking chat, keynote. You clearly are one of the leading thinkers in all this. You're challenging conventional wisdom. So fantastic. It's really great to hear you on that note. Martin posted a question online, but actually he's here in physical person. So the typing the questions up is for those that are online. So Martin is a professor at University of Victoria, Wellington.
Not so fast. Not yet.
Sorry?
Not professor. Oh, associate. Yes.
Oh, I'm sorry. I promoted you.
Thank you very much.
I apologize about that.
Right. Hey, great speech, Ulrich. You posted, I think in your earlier slides, you posted a list of things that could have been done. I think it was third slide or so. But I'm looking at Europe, wondering what actually hasn't been done yet, because there's a lot of stuff there on your list that seems to be ongoing policy development.
Yeah, great question. Well, indeed, a lot has happened, and I mean, this was in a way kind of the framing that I gave in the beginning, right? So 10 years ago, there was hardly any central banker who wanted to talk about climate change. 5 years ago, we had the establishment of the NGFS, and this has really built a momentum, and a lot of things have been happening. I mean, I'm working very intensively with central bankers. We do lots of capacity building, and I see firsthand how the thinking is changing. But my point is that even though you know, we see a lot of action, you know, we see climate stress testing, we see you know, looking into potential prudential responses, looking into you know, how different instruments may be climate aligned and so on. What I want to point out is that there's still very much this notion that, okay, you know, the contribution that central banks can make is still very limited. And when it comes to, say, using macroprudential instruments proactively to address longer term risks, you know, this has not happened yet. Also, when we look, and I mentioned, you know, what the FSB and the Basel Committee, what they've been putting forward, they, you know, it all goes in the right direction, but it's still very, very cautious. And that's not surprising, because, you know, central bankers tend to be very conservative, and it's actually quite breathtaking how over the last couple of years, how much has changed already. But my argument is that we still need much more change, and we need a much more proactive role of the central bank. If we look, for example, at what's happening in the financial industry, well, we still see trillions of dollars going into fossil fuel financing. Huge amounts of money go into deforestation and so on. So clearly the financial system is very far from being aligned with climate goals, with biodiversity goals and so on. And the critical problem is that we need to bring down emissions now. And Ivan mentioned before the importance of working more on greenwashing. Absolutely. In Europe now, 50% of assets are ESG, supposedly ESG aligned. But what does it mean? I mean, if I look around, I mean, in Europe, the economy doesn't look particularly green, and it doesn't look particularly green anywhere else. So there is still a big discrepancy, people talk a lot about green bonds, but do they really make a difference? So I think we still need to see much more fundamental changes in the financial sector, and these will not come about by themselves. Yeah, and of course we do need carbon pricing and what have you, environmental regulations, but we also do need very clear steer from central banks, from supervisors, to make sure that finance is really being aligned. And central bank supervisors currently are still very far from taking these forceful actions.
Wonderful, Uli. We'll stop there. It's New Zealand here. It's morning tea, and I remember when I moved here, a news item that there was some workers that they missed out on their morning tea, and I remember there was tears, and it's like a religion here. So so if you don't want some really angry Kiwis coming after you, there's some more questions. Actually, I had a question, but maybe when we catch up on our special issue, I'll ask you those. Look, it's been incredibly thought-provoking. It really challenges convention, and I think it's so important. You are clearly one of the leading thinkers in this area. It's been a real honor to have you, Uli, and I look forward to catching up with you soon. So,
well, thank you very much, and enjoy the morning tea.